Hey everybody, I'm Adam Chapnick.
And I'm Amy Wan. Welcome to this special edition of Security Token Insight brought to you by the Security Token Academy.
As you know, the Security Token Academy is on the leading edge of the security token industry. We've held world-class events and conferences featuring the top industry experts from around the world.
That's right. The Security Token Academy kicked off things back in June with the first ever Security Token Summit. It took place at the Conrad, New York, and was the first conference to focus on the emergence of security token trading organizations.
The evolution of smart contracts is what's giving that comfort to Wall Street and other issuers that are looking to bring these assets onto the chain, and also giving the comfort to regulators, to reduce frictional costs, to increase the velocity of transactions and liquidity. Regulators also don't want that to be an open, free market. They want the same securities laws that apply to be applied in the new technology, and we have ways now to, via smart contracts, enforce the regulations in real time. So you can drastically reduce the compliance cost of Wall Street, which is a huge cost burden on the industry today.
And I would just add that we'll see a huge class of traditionally illiquid assets become liquid, and we'll continue this kind of never-ending march towards markets for everything and liquidity for everything. And we'll begin to see how those efficiencies start to play into these markets as things that have always been illiquid, only been accessible by a small set of investors, become accessible to a much larger set of investors, and see how those markets develop. A lot of assets today are not digitized, and there's two steps to get to tokenization. The first is, should we take assets that are handled on paper or physically and move them into the digital world? And then there's a next step, which is, should we tokenize them as that path to digitization? And the digitization does a lot of these things. It allows for 24/7 markets, it allows for fractionalization. And so then you have to ask, why should we actually tokenize these assets? Why should we use tokenization as the method to digitize them?
I think it's really incumbent upon us in the industry to build out that venue and do it, I think, with guidance from the SEC, certainly, and CFTC and others, that they want to see a regulated token environment. And I think once that's there, and once there is viable liquidity in a secondary trading arena, I think we're going to see far more institutional players get involved.
The reason why I think decentralized platforms are important in the security token landscape is that I think it's going to be some time before we see real exchanges, bona fide exchanges that are registered and regulated, operating in the security token space.
And so a lot of the challenges of the industry right now are adapting the current day technology back to that older infrastructure and kind of getting back to a baseline. But what's exciting to me is once we're back at that baseline, then when we can innovate from within that framework, I think in the coming year or two, you're going to start to see a lot more innovative solutions around custodianship than just taking physical, doing cold storage, digging things in your backyard to maintain proper custody. I think you're going to start to see a lot more innovative solutions in that space.
What's really interesting about this entire sort of journey in space ultimately is that the notion of tokenization has just completely ripped apart the basics of capital markets, in the sense that prior to cryptocurrencies, any sort of capital raise was done in a geography in accordance with the laws of that geography. And now all of a sudden, through the issuance of coins, you have an access to global markets. And so what's huge about I was going to say humongous, but you took that word. What's huge about the idea that you can raise capital globally is that you're no longer sort of bound by nation state.
I think what you have to remember is that in 10 years, everything that you could do in traditional securities markets, you'll be able to do in these markets. This is the beginning, This is a little bit more of a decentralized way to issue capital. It includes less middleman, it includes more automation, which means lower legal fees, lower accounting fees, lower tax bills. And it takes the power away a little bit from the traditional institutions at the moment, but in 10 years, this will be the norm.
It all goes to regulatory frameworks. So if we're looking at Reg A+, Reg D, and Reg S, there's going to be sovereign nation issues, currency flows that have to be dealt with depending upon those jurisdictions. Right. But put it in perspective, there's $2.4 trillion of unregistered security issuances in the United States alone, compared to our aggregated public markets that were 1.6 trillion.
If you're not doing it as a Reg D, Reg S, Reg A, Reg CF right now, you're out of compliance. And we get approached a lot by folks who have issued as utility tokens, and we just can't touch them. We won't work with them because there's too much uncertainty there until there's better guidance given in that space. And so first and foremost, compliance, and then afterwards, certainly working on some of the other aspects of the campaign itself.
Folks just need to kind of, issue what they need to issue and do so in a compliant way. So if you need to issue a utility token, just make sure it complies with securities laws and don't try to make it an asset-backed security. And if your token really hinges on your cash flows, then make sure it's an asset-backed token and not a utility.
If we do this right, this could be the next 20 years of growth and innovation. Small businesses, they alluded to earlier. If we just are thoughtful about the way we regulate this space, let the innovation grow, just like we did the internet, this will be a great tool for small businesses' freedom across the world.
There's good reason to believe that there's been fraud and scams and retail investor abuse and market manipulation and things that a lot of us that have been in the financial services world have seen many, many, many times through the last several cycles. So this is a new asset class, and it's being whipped around, and it's time to just sort of put the brakes on and see who's who and what's what.
I think obviously each environment has its own sort of nuances to it. So keeping track of those things over time, like what does accreditation look like in Europe versus the U.S. Can you self-accredit? Could you have retail investors in Europe? Right. All these kind of nuanced pieces are components that you have to understand, and that when we're speaking to a customer, and we kind of have to educate them on what they can and can't do in their market. Our smart contracts are all upgradable. We're actually in the middle of reissuing a few of the first security tokens on our platform for that reason exactly.
It's interesting. So it's been said a couple times already today that this is not something different. This is just the next iteration of the capital markets. And so all the things you've seen previously, they're all going to be involved in this next phase as we go forward. And all the different derivatives and other products that come in and ways that people create liquidity are going to be exercised against this market, just like they've been exercised against all other financial markets over the last 100 years.
When I'm asked about a vision of the next few years, Bob Greifeld, former chairman of NASDAQ, recently said a quote that 100% of the stocks and bonds on Wall Street could be tokenized today. In 5 years, 100% of the stocks and bonds on Wall Street will be tokenized. I think that's a very telling quote. I think it certainly serves as an indication of where this industry is headed.
After that great event, the Security Token Academy team worked hard to bring our next event, the launch of the security token industry, in October. Attendees who purchased tickets to our 2-day cruise and conference in New York boarded the Spirit of New York yacht from Chelsea Harbor for an evening cruise along the Hudson River. Take a look. Hey everybody, it's me, Adam Chapnick, with the Security Token Academy. Thanks for joining us here in beautiful New York City. We're here on the river for Security Token Industry Launch Week, and we have been talking to some fascinating people. I want you to take a look.
If you're investing in token assets, you're able to actually do all those investments on the blockchain, which means that you don't have to do audits, you don't have to actually execute waterfalls with lawyers. Everything is done automatically. So when a deal exits or when you want to sell a portion of your ownership in that deal, it automatically is distributed to your investors.
The government took a very strategic stand a couple of years ago in respect of blockchain and distributed ledger technology to say, we need to put Malta on the map in respect of this new technology. Malta is a small island, very few resources, obviously human resources. We are looking forward, looking to internationalize as an island as well as an exchange. Mm-hmm. And I think that it is an opportunity to look at something which is growing, look at the potential and say, do we want to be part of this or not? And the government, as well as the exchange, has said, yes, we do.
There are a lot of companies, and this is my particular experience as a co-founder of a venture-funded company. There are so many, look behind us. Yes. There are so many companies here in this city who have taken venture capital money, and they're too big to get easily acquired. Okay, and they're too small to go public. Wow. Okay, I call that the gulch. Okay, so there are all of these companies that are in this gulch. Yes. In the next year, as they may struggle to raise more funds, they may think, how do I get closer to liquidity? Mm-hmm. If I'm too small, too big to get acquired, and I'm too small to go public, tokenizing, using an equity token, is a way for them to activate the capital that they've had invested in them.
Yes.
Maybe give some liquidity to early investors or early employees, right?
This is a fantastic observation. This is something that I've heard no one else say, but that is a huge sampling. That's a huge sampling.
Yes.
I think that's a great point.
And these companies are all over the world, okay? And there's so much latent talent. There's so much capital that's locked up in startups, which are in the 5, 7, 9 year, kind of age.
Yes.
And those companies, it could be tokenized. They've got financial results, okay, operating history.
Absolutely.
They've got working product and clients. So you can take those companies and you can tokenize them, and you can pay dividends on their revenues or some other form of, payment to stakeholders. And what you can do is you can get some of the early employees, the angel and early round VCs out of those deals.
Malta Stock Exchange is a domestic exchange. So we have Maltese companies on board, we have Maltese investors, so it's an exchange in every sense of the word, so that's fine. Looking at the blockchain, looking at the DLT technology, which is hitting our island and hitting the world in general, we're looking at partnering with key players in the industry who certainly have much more experience, have much more exposure in this area than we do, and really join forces in order to bring two parties to the table. We'd have the technology part, the exchange part, the token part coming on board, and you'd get the regulatory structures and the structures of the exchange, which will incorporate anti-money laundering and due diligence and all the regulatory things that, the legal type of structures, which you need to have.
Yes.
And to some extent, one thing which is missing is the legal certainty. In July, the local regulator, the Malta Financial Services Authority, MFSA, enacted, or proposed, and it was enacted in Parliament, the law, the legislative structure, which will regulate cryptocurrencies, ICOs, DLT structures, virtual currencies, virtual financial assets, and things like that. So we have created a structure which will give, we hope, legal certainty to the different mechanisms which will be brought on board by technology. We feel, at least my view, my personal view is that the technology is moving at a very fast pace, and regulations are really finding it very hard to catch up.
It's true.
And one thing which is missing is legal certainty. One thing which is missing is a way to address the issue of risk. Working in a currency exchange, working in any type of exchange, one needs to address issues of risk.
Absolutely.
And what we hope to do is create a structure under which risk is either controlled or mitigated through legal certainty issues in terms of what happens when things go wrong. It's all great to talk about these things and when they work, and it all works nicely.
Right.
But when things go wrong, what do you do?
Yes.
And we hope that we'll have the regulatory structures which will address both when things are going well, as well as when we have an issue and we have something which needs to be addressed, and that will help the confidence in the market grow over a period of time.
Look, it's been a really interesting year from a regulatory standpoint. People started the year really, really worried about what, in particular, U.S. and EU regulators might do. Well, here we are in October, Adam, and people are still very, very worried about what U.S. and EU regulators are likely to do. And we've seen a big split in just kind of the broader global market. We've seen some of these jurisdictions, like Malta, Gibraltar for sure, become a bit of a safe haven for some of the utility tokens that could be securities or not, and just don't have to address that question because they're not stateside or certainly not raising money here. And then some of the Eastern, Pacific Rim countries, right? So Korea's maintained itself as a very big market for fundraising. Singapore, I was just in as well, very active. Hong Kong, much more activity than what you see here, and it begs the question whether who's right. On one hand, we hold ourselves out in the U.S. having kind of the strongest security market, and it's because of the regulations that make it that way. Well, there is certainly an equally sizable contingent that says, no, wait a minute, you're stifling this nascent market. Time will only tell, Adam, if which one is right.
One thing which we have done is we've created an agency structure. So in Malta, for any entity to be regulated and to be brought on board as an ICO or as a representative of a fund or representative of a cryptocurrency or whatever, they would need to have an agent representing him in the Maltese environment, who is going to be recognized by the Maltese authority. We're a domestic exchange, so at the moment we are definitely Maltese issuers, the government of Malta, issuing paper and equity onto the exchange, and this is taken up by Maltese investors. So that's really our model.
Yeah.
Where would we like to be in 5 years' time? I'd like to have obviously the Maltese market working, because that's our bread and butter.
Course, yes.
But the cream will be from international issues, either issues coming to the regulated main market in the traditional sense, or the crypto ICO type of exchange structure, which could develop as soon as a year away. I mean, we're not that far away.
The next morning after the cruise, hundreds of people were in attendance at the Conrad New York as industry leaders rang the opening bell to signal the official kickoff to the security token industry. Here are your highlights.
In just a few moments, we're going to count down from 10 together, okay? That's not going to be hard. You're going to recognize the number. It's a 1 and a 0. And we're going to count down like it's New Year's Eve. There's going to be a bell. I'm going to cheer. I hope you'll join me in cheering. The cameras are on. If you got a token, take a selfie. 4, 3, 2, 1. Woo! Bravo to all of you and to all of us for making this happen. Thank you all for joining me on the stage. Thank you all for joining us here today. Please help us spread the word. As we spread the word for you, you spread the word for us. Let's make this all as exciting as it can be for the rest of the world.
In June of this year, we were here at the Conrad to host the first Security Token Summit in the United States. And we loved it so much and had such a great time, we decided to do it again. So here we are.
So third wave, security tokens, that's why we're here today. Okay? So this chart showed that over the last year, 2017 to where we are now, about $13 billion has been raised, peaking, as you can see, around the end of last year, January, et cetera. And so the ICO trend, as we all know, is going down. And that's because the industry needs a do-over. They need something like security tokens that have elements of being compliant with regulations. The main applications, the use cases of security tokens are really, really important. Sometimes people get confused about these, but there are three. One is to raise money for startups, for companies that are operating, like an ICO or an IPO. Startups don't necessarily have a lot of assets. They may go out of business. They're very risky. That's why in your asset allocation portfolio, it's only a small amount, 5 or 10% of risky types of investments. The next box, securitization of real estate. Real estate is a little bit more secure. You invest in commercial residential real estate, the building burns down, you've got insurance, there's land value, etc. So you want to unlock that value sometimes through, through security tokens. The third use case is what I would call the crypto fractional ownership of things like cars, special cars. Sometimes people want to fractionalize art, etc. These are the three dominant use cases you'll hear talked about in the industry. Now, what are the benefits? Certainly one of the benefits is 24/7 trading. If you want to buy something on Amazon, you don't have to wait for the bell to ring 9:30 in the morning. Same thing, that's where this industry is going. 24/7 trading, buying and selling, etc. But there's other benefits such as efficiency. Some estimates have said that Wall Street could save over $5 billion a year utilizing blockchain and other related technology. Speed, the compression and reduction from a trading and settlement time of T+2 to T+0 is one of the aspirations and realities of this industry.
About a year and a half ago, with Ethereum's kind of production readiness, we got very excited about the idea of taking existing assets and tokenizing them. We had built originally a payment system that kind of directly converted between, say, dollars and euros and Bitcoin and allowed Bitcoin to be kind of the settlement network. But Ethereum made a huge improvement in what was possible. And we wanted to rebuild what we did around that One part of that was basically kind of creating fiat tokens. That was something we launched last week, which is US dollar coin, which is a ERC20 token, but it's a whole asset-backed token model, which obviously will relate to security tokens as we talk about in a minute. But the growth in ICOs were really a pivotal moment because it was this sort of concept of how can businesses issue digital investment contracts directly over the internet and allow individuals and institutions, but individuals from all around the world to invest in those. And so it was an incredible experiment in crowdfunding. It was an incredible experiment in how do you apply tokens and smart contracts as a new capital formation model. And we got very excited. And our belief was that the technology was sort of getting close to a point where we would sort of see what we like to say as the tokenization of everything, where essentially all kind of assets, whether they be existing assets like a dollar, a share of stock, a piece of physical property, but also newly, truly digitally formed assets. So an investment contract written entirely in code that doesn't have an external, say, share agreement or something, that kind of truly digital native assets would be born, and that there'd be marketplaces for those, and that those marketplaces would create platforms for businesses to form capital, to grow, and obviously that would create significant opportunities for people who want to invest. We acquired Poloniex in February of this year. They were really innovative in being one of the very first marketplaces for all these alternative assets in the United States, and grew very, very fast. They needed help kind of scaling and growing the business, but that was the first key step in building a token marketplace that can support a really broad range of digital assets, from currency assets to commodity assets to ultimately what we'd like to see is the trading of security token assets as well. So that led us to Ryan and the Seed Invest team, and really wanting to have a primary issuance platform for raising capital for businesses to form capital, but to marry that with the crypto infrastructure that we've been building out to be able to allow businesses and ultimately even individuals, we hope, to issue digital securities over the internet and allow investors, both accredited and unaccredited investors, to invest in those. And ultimately to provide global secondary liquidity platforms for those as well, which is a really tremendous opportunity that crypto makes possible.
Here's what's so significant about it. We're actually bringing decentralized investment banking services as an industry to the parts of the world that have never had access to low-cost finance and sophisticated financial services. This is really the power of the blockchain, our ability to reach anywhere. The kinds of services that are typically limited to cities like this and other places like London are now available anywhere. And today's the day for that. This is the kind of thing that can change people's lives. So to know where we're going, it's helpful to actually look back quickly to where we've been. And hey, the secret's out. Blockchain is a pretty cool thing. It's got a lot of power to it. It's not the only thing, but it certainly can change paradigms. So of course, you've seen earlier the first wave. Bitcoin was prominent as we saw a transformation of the payment space. I know it was prominent because when I ride in a cab, the cabbie will ask me how I'm like Bitcoin and how we're different than Bitcoin. He knows about it. My mother knows about it and asks me the same question over and over. So it is, in fact, a pervasive technology at this point. Next up, we showed through initial coin offerings that we could actually transform the way that capital is formed. There was a new model out there for capital formation that could affect folks and could reach innovative new models that weren't previously reachable. But there was a problem with both of these models. Frankly, a lack of identity in the services, or anonymity, was a point of emphasis in many cases. This is simply incompatible with compliance models. And when you don't embrace compliance models, you end up doing very good things, but also being a safe harbor for traffickers and evaders and launderers, et cetera. And frankly, societies cannot tolerate that behavior, so they must come down on this. But what if you could get all of these benefits that we've seen and uncovered and extend them even further by, instead of avoiding compliance, actually incorporating it and extending it and making it an even greater, easier, more accessible solution? So that's in fact what we've done. And what you see we and our industry partners doing is really unlocking what has been known and has been documented to be trillions of dollars worth of illiquid assets. Through this industry, we expect to really unlock the liquidity premium in this and make sophisticated services available to folks everywhere.
You are going to want to have a token that's listed that enjoys the preemption of state blue sky. And right now, there are only 2 national stock exchanges in the United States that confer that advantage. They're the New York Stock Exchange and NASDAQ, right? And the significance of that is that if you don't preempt state blue sky, then you have to register in each of the 50 states in order to allow folks to solicit trades. And what you find is that in this country, that most of the big firms, by policy, do not allow their brokers to solicit trades in the aftermarket, right? If those securities are not enjoying a national securities exchange exemption. Those securities have to be listed.
It's very important to understand how this works, because all of our discussions, they're kind of based on that, on understanding this. And what is a token, right? A token is a smart contract. It's a piece of code deployed on the blockchain sitting at an address. And in this case, it's a smart contract which itself has an account balance. It's kind of like vertically having an account balance of other addresses who own whatever number right now. That's in the simplest form is what the token is. What makes it so interesting is not that this is now a new form of like Excel sheet, which is now distributed or something. The most interesting part of this is that this runs on a blockchain where it's not alone, but where it's surrounded and surrounded by a lot of other smart contracts or other programs running on the same virtual computer. And this can be, for example, a voting system. This can be a decentralized exchange. This can be a prediction market. That can be whatever we can come up with. And the very interesting part here is that this can talk to each other. The token can interoperate with all of the other smart contracts, and the other smart contracts can interoperate with it. And it mainly works because we have standardized it. And in this case, it's ERC20. That's what brings me in the picture here, because I was the one who did that.
How do your roles help an issuer with that, maintaining that process?
Well, it starts with, it generally starts with the companies who are helping them write the smart contracts, because you can build Rule 144 restrictions into the smart contract. If you're doing it as a Reg S, a lot of people run a Reg D and a Reg S concurrently. So the Reg D for US investors and the Reg S for the rest of the world. And there's a lot less restrictions on the Reg S. So you'd have to write that logic into who might want to transfer it and where's it going. The reality is that obviously if they're using a custodian, then we're in charge of enforcing those restrictions that are on the securities. If they're using direct registration with the transfer agent, then the transfer agent will enforce that. And I don't want to take words out of these guys' mouth.
Yeah, I mean, the only thing I was can add, all our business is private. I don't do public companies. If I do, they go, that's where I draw the line at the private company. So I am all about the private world. My Reg A Plus clients are private. They want to be private, but guess what? Shareholders can trade. Shareholders can trade. They can start trading the minute it closes. That's the holy grail of the regulation. And the nice thing about this regulation in the United States, it's available to Canadian and US issuers or domicile corporations, and they can sell their securities to anybody in the world.
To view all of the videos from Security Token Industry Launch Week, go to our website, securitytokenacademy.com, and click on the Events tab and select Launch Event Video Library. The best part, it's free and contains a wealth of information.
Another big event was the StartEngine Summit in Santa Monica. The event was held at the Fairmont in downtown Santa Monica, just steps from the ocean.
Adam and I were there speaking with attendees. Hundreds of people packed the venue to learn more about security tokens and more.
Right now, we see about 15% of our customers, 15,
okay.
1-5, who are issuing tokens with their offerings. These are entrepreneurs that have companies that are related to the blockchain as applications or related applications. But with ERC 1450, we're going to be announcing soon that every company that we launch, every share we issue, will be tokenized. Regardless
wow. That's a big deal.
Regardless whether your company is a blockchain company or you are a restaurant looking for capital, an apparel business, a wine-making business.
Electric car company, maybe.
An electric car company, absolutely. We believe that tokenizing securities from the launch at the beginning will be very appealing to investors.
If you think about cash, your dollars, you probably have some in your wallet, and it's most likely you rarely open your wallet and use them. You use your debit card, you send by Venmo, you log onto your bank account and electronically send a check to somebody. So our money is 95% electronic as it is now. It's not physical. And banks, you walk into a bank, they don't have all of the bank's cash in a big vault. They send it to the Fed, where the Federal Reserve keeps it in electronic records as to what bank has what records. So dollars are already electronic. They're already in digital form. So a token is just another way of taking an electronic dollar and using it in commerce or for anything else. Like Venmo, you could send point to point. Well, with a stable coin, which is a tokenized dollar, you can send point to point. You can use it for anything.
We've had clients say, well, is it a security? Is it a commodity? Is it a currency? And the fact is it could be all of those things or none.
So it's not mutually exclusive, right?
Correct, yeah.
When we think about security tokens, one of the big things we like to emphasize is that you need to be really clear about the rights that the token gives you. And a great example I like to think about, for example, suppose you wanted to tokenize a piece of art, like you have fine art. You know, art isn't just about the financial return, right? It's about enjoying the art. And then if you owned a token, you would probably also want some input into what happens to the art. Who does it get sold to? When does it get sold? How much does it get sold for? And so just issuing a token isn't enough. You have to think about the rights and the governance and the other pieces of the platform in order for your token to be useful and valuable.
Yeah, so it's 2015, got interested in the technology, and I guess I'm one of those nerds who just got obsessed with the technology.
We love nerds that are obsessed with technology.
It's just the grandiose idea of what it's going to change.
Wow.
And then when you get down to it at a technical level, and I do not understand cryptography, but I understand every other part of it, and it's just like, this is the coolest thing, the way it works, and the decentralized nature of it, the fact that you don't need an intermediary, it's just, where else do you see that? And the answer is nowhere.
Global capital formation and the ability to sell a security to anybody in the world is a humongous, world-changing thing, right? This hasn't happened yet. You haven't had the ability in today's markets for somebody in Japan to buy an investment in a venture fund in the US with cryptocurrency. Today you could do that, right? It's a whole different ecosystem. And then the promise of liquidity, right? That's happening, it's coming, it's going to take longer than everybody wants, but this promise of the marketplace and the exchanges is really going to be the two major areas that we're going to see change the world.
I think we'll just see tremendous growth in the industry. You're already seeing a lot of private placements of tokenized offerings. You're seeing the tokenization of real assets, of real estate, of oil, of a lot of I'm working on a solar deal. So you're seeing that movement, and I think that will only grow once those floodgates open.
I think a couple things are missing. One, clarity on regulation. A lot of funds like ourselves issue out of Cayman because that makes it a lot easier for us to work with non-U.S. investors.
Right.
And so I think there's still a lot of questions there around some regulation and working through that. I think the other part is just regular investors getting comfortable with this space, right? And I think that will be the driving force, is when people that write $50,000 checks into normal smaller micro venture funds say, oh, I want to move into this space. I want to move into, I feel comfortable owning this asset. It's kind of like email, right? When email came out in the 90s, people were like, I don't know how to deal with this. I don't know how this works. And today we can't imagine living without it, right? And certainly today there still is traditional, we call it now snail mail, right?
Yes.
And there still will be assets in the future that are traditional assets that are built on paper, right? Instead of on this. But I think long term, the adoption will be driven as the mass public starts to become comfortable.
I think the important part is developing the buy side
Most crypto investors are looking for venture-like returns, so they may be less interested in real estate, although I think they should be. But you look at a lot of the traditional real estate investors, they're not yet comfortable with the platforms, digital wallets and so on. So I think bridging that gap is going to be the big effort over the next 12 to 24 months.
The more there are players that are available to help companies raise capital, the better it is for everyone, for economy, for job creation. So I find this a strong positive. I don't look at competition as they have to lose for us to win. I look at competition more of a co-opetition where we work together. That's why at our summit here today, we've invited all our competitors to come. Most have chosen to come and speak. And we have done that with no strings attached, absolutely wanting to collaborate and have an open dialogue.
StartEngine is a gold corporate member of the Security Token Academy. You can find more information on our website, securitytokenacademy.com. Just click on the directory.
The Security Token Academy team attended Crypto Invest Summit in downtown Los Angeles in October. The event attracted thousands of people. I was there doing interviews with some of the big movers and shakers in the STO industry. Take a look.
I talk a lot about this, kind of rip ICO, hello STO.
Okay, good.
The world that we lived in over the last 18 months is gone. This gold rush mentality.
Right.
Let's be honest with each other. Cryptocurrency right now for most people is online poker. And if you're being truly honest, as what I call a lot of these crypto projects, kind of being a entrepreneur, you just didn't want to deal with the SEC. You didn't. You're going to argue, this, financial autonomy or the rise of blockchain is going to disrupt demand. But the reality is, going through the SEC and doing things regulated is hard, it's expensive, and it's long. And you got to have a lot of wherewithal to do it properly.
Yeah.
The SEC has no problem with cryptocurrency. So because we're actually trying to take Fundware public, and we have a registration statement filed with the SEC to list on NASDAQ, we have to make sure that our cryptocurrency is 100% buttoned up and compliant. So it's a security token, because that's the only thing that you should be launching right now if you are raising money. Let's be honest, the idea of a utility token is a little stupid.
Dead.
Thank you.
Right, it's
Thank
dead.
you.
Well, obviously,
now
you're preaching to the choir here.
For a long time, especially in hip-hop, there has been a discussion, I believe it was even started by another artist, KRS-One, about monetizing fan bases using their own forms of currency. And this was before cryptocurrency was ever invented.
Interesting.
So these sorts of things, in fact, in other than hip-hop, the Grateful Dead is a great example. Inside the Grateful Dead is this entire captive economy that goes on between their fans.
Right.
And everybody knows about it, right?
Yeah.
It's iconic.
Yeah.
But what happened, but it's a barter system. And if we introduce a cryptocurrency into a barter system, even if it has no market price, it naturally attains value through all of those Austrian economic mechanisms that we all love about cryptocurrency to begin with.
Yeah.
So these fan-based economies are what form the foundations for the monetization and the value of these cryptocurrencies. We set them at $1. But what the fans do with them afterwards is what actually gives them value. That the only value, the only intrinsic value in these cryptocurrencies is the brand that they carry. Because the brand has value outside of crypto already.
Everybody a year ago was focused on the issuance of ICOs, and most of the projects have failed, and they have failed to maintain their value. I'm not talking specifically about the projects, but most of the ICO coins have simply failed to maintain their value because there is no liquidity provisions. The issuer doesn't step into the process, and what I've explained in the very beginning, the market runs can kill or devalue most of the coins.
Yeah.
So without liquidity in the market, without all the market participants understanding the need and the means to achieve such liquidity, it's never going to be a widely accepted mechanism. And the same thing for security token offerings. In order for this mechanism to become as widely accepted as a traditional one, and certainly it has a lot more advantages than a traditional IPO, there definitely need to be a liquidity mechanism post-STOs.
It's a no-brainer, and it's inevitable that private companies are going to raise capital using security tokens. The thing that's been missing all along is enforceability rules. And there are a lot of thought leaders that have been screaming through their mouthpiece of their blogs, and that, hey, what is the story with this ICO market? You don't need it.
The Jobs Act exists, crowdfunding exists, right? The laws are there, just follow the rules.
Right.
And I think that the industry at large has taken its time to learn what that means, and has slowly come to the determination that, oh, we can do this, as a token, it works. The advantages are obvious.
And there was a report that came out a few weeks ago where there's over $5 trillion worth of equity locked up in people's homes. And the only way right now to unlock that is through taking on additional debt. So we want to change that. So we figure that California is a nice big place to start, and that's the place where we have all of our experience historically.
Amazing. And so what phase are you in? Have you launched? Is this pre-launch? What are you doing now?
We are a few weeks away from launch. So we launched our initial MVP, which is our minimum platform, just to show the world that to put our sort of flag in the ground. That was a couple of months ago.
Okay.
But we start offering our security token to the members of the public at the end of November. So literally a few weeks away.
Wow.
So we're going to start by offering to US accredited investors, but meanwhile we have our filings busy cooking with the SEC, and as soon as they've sort of popped out of the oven, which should be sometime next year, hopefully the early part of next year, then we will be able to offer our tokens to accredited and non-accredited investors in the US and beyond.
We plan to launch the MVP by December. So we need this money to expand. So basically to put it on the blockchain with more comprehensive system, because the MVP is only basic functionality, and to expand for marketing, for legal, and also we need to register our stock in order to our investors to receive these tokens, and our tokens will be attached to the dividends of the company.
So the Jobs Act is what enabled a lot of this innovation to happen, and what enabled the crowdfunding movement to really start. So they were the early pioneers. I know Ryan Feet with Seed Invest was instrumental in drafting some of that legislation, as well as many others. And it's basically an evolution of that. So crowdfunding, raising under SEC registration exemption regulation CF allows you to raise up to just over $1 million. Some of the regulation exemptions that we're utilizing are Reg D 506C, which unlimited amount of raise for accredited investors, Reg S, which is international and with smaller minimums. So opening up this global capital pool to real estate sponsors in the U.S. and at smaller minimum sizes, and then also Reg A Plus, which is an interesting one. It has a lot of opportunity. It's kind of a combination. You can do non-accredited and accredited, up to 50 million, although they're looking to try to raise that to 75 million. The only downside with Reg A Plus is there's some additional reporting requirements, which aren't necessarily bad if the sponsor is willing to take them on, and if we're able on the back end with our smart contract technology to automate a lot of that reporting for them and automate the report filings and all that kind of stuff. So we can see real time who all the token holders are, exactly their ownership, and then all the information on them that the sponsor would need to report.
We kind of look at where is this space going to be heading. It seems that tokenize the world is a reasonable strategy to follow and kind of a reasonable assumption. In that case, there's going to be a lot of assets that are tokenized that are going to have different regulatory requirements, security tokens being kind of this broad basket of equities, commodities, bonds, whatever. That's kind of a traditional financial instrument that comes onto the blockchain. So we would love to trade that. There's two questions around that. The first one is regulatory. So we, as a decentralized exchange, we don't hold anyone's funds. We don't have that custody element, which means we're in a slightly different regulatory kind of basket than some of the other exchanges. We're more akin to a very advanced wallet. So we're working with the legal team to explore and understand if we start bringing in these assets that are clearly securities, as the assets themselves claim to be, how does that change our regulatory burden and requirements?
Yeah.
The other piece is talking with the issuers and understanding the technology that they're creating with their security tokens. So one of the cool things that I think is resonating with regulators is the idea that the tokens themselves can have compliance built into it. So just how our smart contract is limited in terms of the functions that users can do, deposit, trade, withdraw, you can have the same sort of thing with a token where it's limited in who can possess it, how often it can move, when it can move. And if you combine those with a smart contract where all of the rules are on the blockchain, you really have this nice system where it's actually self-regulating. So anyone can actually peer into the contract or into the tokens and understand what are the restrictions here, is the token acting in a compliant manner and actually abiding by the off-chain compliance process that needs to happen for this thing to move.
Right, sure. Well, why did you guys decide to work with security tokens in general? Why is that the space that you work with?
Because we believe security token is next generation of ICOs. Yeah.
And where do you think they're going to go in 2019, do you think?
I think mostly is startups.
Startups?
Yes, startups like tech startups or some startup come with a good idea, but they have a hard time to get funded by traditional like venture capital or something. Yeah, and we believe the other good things for security token is they can let institutional investor tap into the token market.
Yeah. Are you seeing interest from institutions that do you work with at all or not yet?
Yeah, like there are lots of institutional investors like token fund in like in China, in Taiwan, and Singapore. There are lots of like fund manager is look into security token right now.
I think what we're seeing is that we started getting the first batch of institutional investors and institutional projects that are moving into security tokens, and that's the important thing, because I actually don't like the concept of security tokens are a way to fix ICOs or to make ICO legal. So that's a very short-sighted thing. Right. I think security tokens are a bigger thing. It's about digitizing securities on the blockchain to provide a lot of the efficiencies that come with real-time settlement, traceability, auditability, and automation of digitized securities.
Absolutely.
And I think that the sign that we're moving towards that direction and away from like, oh, we're going to make ICOs legal is a very good sign.
We actually started the company originally to work with one client in particular, and that was Slice. Oh, okay. And Slice was tokenizing LP equity interests in commercial real estate all over the country for sale to international investors, right? Which we thought was an incredible use case, and Slice has found quite a bit of success with that. But one of the things that Slice found was that a lot of the investors they were speaking to were not quite so interested in the blockchain side of it, right? The international investors were like, look, we really want access to the product that you have, the actual real estate, right? Of course, right. We don't really care so much about the blockchain side of it. And that was why on the DAA side for digital asset advisors, we were like, okay, we need to get more into educating these institutions, because everyone is tackling, all right, let's tokenize the world, right? Let's move all securities onto the blockchain. Let's tokenize every single asset. But the problem is, if the actual investors, the buyers of those tokens, don't understand the benefit of the blockchain, well then they're not going to buy them. They're just going to look at that and say, well, why don't I just do it the way that I did before? And there's still a little bit of that association with the dark days of crypto, right? When Bitcoin was sort of a dirty word, and people were like, oh, it's just money launderers and whatever. And we empirically know from studies with the London School of Economics and here in the United States as well, that no longer happens, right? But in the world at large, of course, the public,
people don't understand.
They still have a little bit of that.
I know everyone's going after the private/unregistered securities market right now, but I think what we're going to see is a number of them that are playing in that space, they're going to go for full registration.
Yep. We've already talked to some today, actually. Yeah.
So it's going to happen, and then it just opens the floodgates at that point. There's a ton of money out there. People want to see that. They'll feel more comfortable investing at that point.
Right.
So I'm looking forward to that.
Interesting. Very wise.
Security Token Academy was invited to attend World CryptoCon in Las Vegas. The SECURITIZE Monster Security Token event took place there and featured some of the biggest names in the STO industry. Here is more from the Aria Resort in Las Vegas.
So what happened today when you said you tested some of their protocol successfully, you were able to trade one of their tokens, essentially, right? Wasn't that what happened?
Correct.
That was an executed trade.
Yes, it was a test trade. It was an executed trade on mainnet of a test token using their protocol, so that was very exciting.
And that says a lot, because everybody's kind of holding their breath, waiting for that to become widely employed, and one of the problems, or potential problems, was this whole thing doesn't work.
Right.
What if we try and it just fundamentally doesn't work yet with the technology? And
Right.
sure enough, today's the day.
And I think that's one of the exciting things, and as a lawyer in the space, it's exciting and also terrifying at the same time, because you have this technology that can improve the way assets transfer, the way you track assets, but there's a little bit of a paradox or a catch-22 in that even though it's easier technically to transfer some of these assets, because you're talking about real-world assets, you're talking about securities, you're talking about regulated products, it's not any easier legally.
No.
And so threading the needle and finding the points in the transaction life cycle where you can make improvements without running afoul of securities laws, making sure that you comply and work with market participants, I think all of those are really important to the ecosystem as we move forward. And I think that's part of the reason when you look at SECURITIZE and their DS protocol and kind of putting these tools together, you can start to build an ecosystem where, you know what, maybe a year ago it looked like it would be kind of a long time or a very tough road ahead for this type of industry to thrive. But after months and months of work, you start to see some progress, proof of concept, and I think that'll help drive adoption.
There's been a lot of static or bad advice out there, and so you still have people making mistakes that are very predictable. It's very difficult to predict who's going to be successful, but it's very easy to predict who's going to, crash against the wall.
Really? Okay,
and the people who are today, U.S. based, the mind of management is in the U.S., and they're trying to go to Switzerland to create a foundation to do an ICO, or they're telling me, oh, I've been talking to this amazing lawyer in Malta who says we can just do it there.
Yes.
That they're missing the big point, which is in the United States, the Securities and Exchange Commission is a bit old-fashioned. They have the Securities Act of 1933, the Securities and Exchange Act of 1934. Those acts have not needed giant amendments in the last 90 plus years. They've been in, or 80 plus years. They've worked just fine. And anyone who thinks today that the SEC feels that there needs to be wholesale changes to their rules hasn't dealt with the SEC. And so what I'm seeing from entrepreneurs is smart entrepreneurs that are working with platforms like SECURITIZE and understand compliance, et cetera, are really able to take advantage of this market. The people who are trying to position themselves too much as pioneers, they're going to keep getting the arrows. And those arrows are going to be increasingly painful, whereas the settlers, the people who are going to do things in a compliant way, they really are going to get the land. And they're not going to have to worry so much about the arrows.
I do think that some countries, for example, countries in Europe, I'm not sure about Asia. I'm still skeptical because they're the ones who keep moving the deadline on the issuance of the licenses. So in Europe, 100% sure we'll start having licenses to be able to trade security tokens. So if we have the licenses in Europe, the rest of the world can also participate. So, and I truly believe that security tokens is the future because, think about regular share. Like if you have Apple stock, you cannot go to Apple and buy iPhone. You cannot go to Apple's website and vote for the next product or feature you want to have on your MacBook Air, unless you're a majority stakeholder. But your stock, it's nice to have. It brings you money, but you don't feel the value. You don't feel like you contribute to the society. With security tokens, you can vote on the platform. You can be a part of the management of the company, and I think that brings so much excitement to people to be a part of it. And it also opens doors to retail investors. Like so many people can participate in security token offerings instead of IPOs. It's really hard to get there, and it's really expensive for the company to hold your IPO. STO on the other side, it's not easy. It's not like utility tokens, but it's much easier than IPO. And
there it is.
Access to the capital is crucial for the company.
Absolutely, absolutely.
So
Awesome.
I do think it's the future. It's really hard to know, will we have everything in place next year? I think the next year is going to be the starting year, like this, like the moving year, like we will get like here and then we'll go way up.
Okay.
I honestly
Launch
truly
pad.
believe that. Like,
2019.
I remember I saw a presentation of Polymath and they show the line like we're going here. It's like, oh.
Yes.
So I do think that 2018 is going to be like moving because we're
hockey
already
stick.
here.
Got it.
There are already a lot of competitors, there are a lot of exchanges, there are a lot of custodian services, compliance services. Not enough, definitely not enough.
Yep.
And I really think there are more going to appear in the market. There are a lot of people coming from traditional markets, coming with compliance, coming with banks doing like crypto fiat. So I really think that more people will come to the industry, more competition will be here, and competition is always good. So we'll have that move.
Okay, so where do you see the future of security tokens most, I guess, as the most exciting place? Is it going to be in the tokenization of assets, like my house, I'm going to be able to sell my neighbors like 3%
No one wants
of
your
my
house. Sorry.
Right. Okay.
There's no liquidity for half of your house.
Right. No. Okay. Then where's the exciting
I think we're in
application?
such early innings right now that it's very hard to say.
Right.
That said, I think there is a real use case for things that have fewer than 200 or maybe fewer than 2,000 investors.
Okay.
Where they can build a community around the ownership of stock or something else, and that investors can get some liquidity for that security. And it's not going to be great liquidity. I mean, if you're talking about tokenizing maybe a 100-unit condo building in Florida, you might have 300 investors.
Yep.
Most of them are retirees. They don't need to sell, except for that one guy that really does want to sell.
Right.
And so what does he do right now? He has to go to his attorney and say, okay, you put me in this thing. How are you going to get me out? Do you have any other clients that want to take my place?
Right.
And the attorney's like, yeah, I'll find somebody, and that might take 6 months.
Yes.
This tokenization allows that investor to go to an ATS, a broker-dealer, prove to them that he owns this asset.
Right.
That attorney knows he owns the asset because he helped him to get into it.
Right.
But no one else really does.
Sure.
The token will help him to prove that he's the owner, and then he can put up an offer to sell it. These are not going to be heavily traded. I can't imagine us saying, "Oh, look who just moved in. Now we need to buy," or there was really good foot traffic at the rental office today.
Yes.
So therefore we should be buying up this development. Those things aren't going to be happening.
That's interesting.
So
yeah, that's a good observation.
You're not going to get market makers to come in and say, "Oh yeah, we're a penny wide, 10% of the building up." There's no market for that.
So you guys are also a market maker. That's a great term also that we hear, but nobody knows what that means. So, I mean, maybe they know it's a liquidity creator, but how, why,
right,
where,
so they think of market makers as those guys with the colorful jackets that sit in Chicago.
Right.
We used to be the colorful guys that sat in Chicago. We still are in Chicago with less colorful jackets now. But a market maker is simply someone willing to stand in a crowd and say that there's a price that they'll buy something for and a price that they'll sell it for. And in the case of digital assets, or really just any electronic market, it's people who have computers that can make up those same decisions.
Yeah.
And they're indifferent to whether they buy next or sell next.
Yep.
And they're going to make a fair price no matter what. Sometimes they have obligations to make prices, and sometimes they don't. It really depends a lot on the market and the market microstructure. But that was our industry for a long time, mostly in equity derivatives. And then it was in Bitcoin and digital currencies across different markets, where our computers stood in and said, there's a price at which I'll buy 10 Bitcoin and a price I'll sell 10 Bitcoin.
Yeah.
And those were, we thought those were fair prices and people would trade with us. And
it seemed to work out.
It seemed to work out all right.
How do you go about sourcing both sides? Where do you find all these investors and how do you find all these issuers?
So the issuers, it started with me and my team just putting the information we could find online and putting it on our platform from their websites, from white papers and things like that, and then reaching out to that team and saying, hey, here's what we were able to find. If you'd like to add more or change it, please feel free. We'd love your participation. And so that's how we started, because the idea was that we needed to provide some use cases. And as we found since our launch, a lot of issuers have directly reached out to us and have filled out our forms to provide their information live.
Oh, that's great.
It's totally free for any issuer issuer. So it doesn't make a lot of sense if you just stay away from our platform. We don't take any fees from your listing. It's just a way for you to get more exposure for investors. So we found that we haven't had much issuer pushback, and we have not had much issuing platform pushback. We've actually are in discussions with some platforms that want to just mass list all of their deals on our platform. Because again, why wouldn't you, right? And so we have some marketing and promotional services that are, can be purchased to provide more of that branding space on homepages and things like that. But it's totally free as the initial package to list your offering. And then for investors, they're interested in finding out this information as well. And so we've started by reaching out to our own network through the blockchain space, who are people that either are interested in security tokens or people who have participated in utility tokens who want to learn more about security tokens but don't really know where to go. This is a great spot to direct them. And so we've started to direct them that way, as well as working with SEO and other algorithms to work with that as well.
So I think when we started this process, we envisioned thousands of investors, internationally that would be interested in this, and there just really wasn't that strong of demand as we initially thought. And maybe that will come as the market continues to evolve. I think that the liquidity is more limited today than people think. Right?
Interesting.
So when I think of liquidity in markets, there's really two things that bring liquidity to markets. It's high-frequency trading and the derivatives market, right? None of which exists for private assets today. So liquidity will be very, very limited. And again, because we're a venture fund, we don't really want liquidity right away. Meaning, like if you buy this asset, you should buy it because you think we're investing in great companies, and maybe at some point, several years down the road, you want to sell it. And that's kind of how we think about it. I think that liquidity is going to be much more limited than people anticipate for the next couple of years.
Interesting.
But it doesn't mean that's not a good reason to build one, right? So it's a better form of ownership, and so I think that people should think about that when they're building one. This is how I believe all assets will be structured in the future. And so if every asset becomes a digital asset, why not start now and have a better way to own your assets?
It's really an interesting time because we are seeing companies and exchanges like the NASDAQ is looking at how they can become more of a player in the token world. So that's naturally going to be a security token. It's unlocking a whole group of investors that are institutional investors, Coinbase's custodian capabilities. We just see there's a massive movement, and that money will flow in because the security token, or I should say digital security side, gives a lot more liquidity to a position with a company. And it might not just be the equity of the company. It might be specific offerings. Like ours isn't the equity of the company. Ours is against a specific area focus that investors can come in and benefit while the company increases in value and participate as more of a community, but then have that liquidity side. So we think security area is just going to explode.
Are you noticing any kind of trend in terms of the kind of companies or people that are coming to you to do an issuance?
I think the people are getting better. I think the quality of people are getting better. I think people are coming to us who have more visions of companies than kind of ideas of the past. The number of STOs and people who are accepting that the thing they're going to launch is a security has definitely increased.
They're not resisting, saying, mine's a utility, it's a utility.
I mean, when we say STO, we really mean a token that is intended to be a security for its entirety of its life, right? That's the true STO.
Got it.
We're seeing two token models where there's revenue or a dividend paid to a security token holder of a utility token, which serves as purchasing power in some kind of network. There's tokenized assets, tokenized real estate. As you know, there was a East Village condo at $30 million that was recently tokenized. I think we're going to see a lot of this
now that wasn't through Republic, but it's an indicator.
It's an indicator of, so these tokenized asset markets are really new, right? They're effectively no legal place to exchange these tokens. Liquidity is not necessarily there. This is just the beginning of it.
That's right. So also the Aspen St. Regis was another
Aspen St. Regis was another bellwether.
Big one. Something I think that's interesting is I get to sit, I often say I'm a caveman among geniuses, and it's fun because everybody I talk to is generally an inch wide and a mile deep. You guys are doing one thing incredibly deeply, and I get to sit an inch deep and a mile wide. But most people in this ecosystem know nothing about something in the ecosystem. So I wonder if this might even be the first time that we're getting the whole life cycle together in a room and try to say, oh, that's what you do? Oh, we could work together on that, or we need that, or something. I think it's exciting. Is that part of what you're thinking?
We definitely, we brought a bunch of partners here, but we expect a bunch more partnerships will come out of it. And we've invited folks who other people might see as our competitors to come and join the event.
Yeah, I think that's great.
It's very encompassing and inclusive. That's where we need to be right now.
Great. So once this has happened, how do you see that benefiting the space, let's say 6 months from now?
Well, hopefully we'll have a much more robust market where everybody's roles will be clearly understood, and so we'll be able to work more quickly to get these things going.
Right. And now looking into the Fin crystal ball, let's say 12 to 18 months, is the security token ecosystem going to be $1 zillion? Is it going to be exactly where it is today? Is it going to dry up and go away because of overbearing regulation? What's going to happen?
No, I mean, I think realistically, it will probably be in the billions of dollars. I mean, just with the issuances that we've been working on, you'll get to those types of numbers.
Okay.
I think what will be interesting in that window, that 18-month window, is how much liquidity gets created and how people create new, really creative ways for liquidity. Like we had a conversation recently with a company that's doing, they want to basically lend against securities, which makes sense, right? Because in the real world today, you can borrow against a real security. Why wouldn't you be able to borrow against a digital security?
Yeah, it's a huge industry, in fact.
Exactly.
Yeah.
So that's something we think we'll start to see happen, and that's another type of liquidity that maybe people aren't thinking about.
Amazing. Well, you heard it here first. Thank you so much again for joining us, and keep coming back and let us know what you're seeing.
Thank you.
Thanks, Jamie. SECURITIZE is a gold corporate member of the Security Token Academy. You can find more information about the company on our website, securitytokenacademy.com. Just click on the directory.
2018 ended with our final security token meetup of the year. It took place at Maggiano's at the Grove in Los Angeles. Here are your highlights from the event.
Hey everybody, it's me again, Adam CHAPNICK with the Security Token Academy, and we are here at beautiful Maggiano's at the Grove in Los Angeles for the second Security Token Academy meetup in Los Angeles proper. Technically the third meetup in the greater LA area, but the second in Los Angeles. But most importantly, we've got a lot of great people here to talk security tokens, and we're going to meet them and find out why they're interested. Come on with me, let's see. What do you think is the future of security tokens?
Oh, it's big. I think that people, we think about all these different things that is possible, but I think once the space matures, there's a lot of things that we don't even think about that are actually going to be possible with security tokens and tokenizing assets, things like that.
So, a year from now, how big is this group going to be?
I mean, I would say like 5 times the size at least, I think so.
Yeah, do you think people are going to get involved because they want to be rich, or you think they're going to get involved because it's going to make life easier business-wise?
I think unlocking all the possibilities and opportunities that make things easier is definitely something that people are going to be kind of looking into and saying, wow, this is actually possible now. But when I really think about it, I think that it's a little bit of a mix of both. I would say, of course, people are in it because they feel like it's the next financial, I would say, opportunity for everybody to kind of make some money. All the different abilities and opportunities, basically being able to engineer securities is extremely interesting. Immediate liquidity is extremely interesting. But then, all the different things like real-time markets in the real estate, that's something that was never possible till now. So,
what do you think right now is the biggest challenge for the security token industry today?
The fact that it grew out of ICOs. What that did was it created unreasonable expectations up front for security tokens, whether it's regarding liquidity, ability to raise capital, or simply an understanding of I guess the non-legal community as to what it actually is. And I think we're starting to come around there where expectations are starting to be dampened a little, and we're realizing we're just selling a security, and so whatever you would have raised.
Rationalized, maybe, not dampened.
That's a fair way of putting it. I like that as well. And so I think that as we go into next year, I think we're going to start seeing a kind of reasonable expectations and some growth that's going to be growth based on the underlying equity or the underlying asset and not necessarily because there's a token.
Have you noticed anything in the investor side in terms of sort of an evolution, maybe from where we had, there was equity crowdfunding and after the Jobs Act, and then there was this sort of hiccup, which was positive and negative, of the ICO explosion, and now we're in the security token phase. How have investors viewed that evolution?
I think investors that are really serious saw the ICO space as kind of ridiculous and what it was, speculative and just nuts, right? And some of them participated because within that crazy world, there's a lot of gems and some really interesting stuff and killer technology. But I think that they're all pretty excited about companies doing it legitimately. Like I was just talking to a company on Security Token Academy. You guys broke when Circle bought Seed Invest, right?
Yes,
so I'm talking to one of the companies that's about to launch a campaign on Seed Invest, and they're a crypto company, and in their documents it's going to say, when we or if we issue a token, you'll get this amount. That's fully compliant security tokens that investors are legally allowed to participate in. Technically, nobody knows if they were even legally allowed to participate before. Many funds completely avoided it because it would have made them default basically on their LP agreements. They weren't even legally allowed to participate.
Right.
So this is now a real industry from a legitimate perspective, right? I mean, we don't always want to follow all rules and say that just because the government says it's okay. But now, at least for the large majority of investors in the United States, the government says it's okay.
Jeff, good to meet you. What do you do, Jeff?
We work at a blockchain-based renewable energy company.
Wow, okay, so you're in the right place. Tell us more. What's it called?
It's called Impact PPA. And we're basically going out and setting up renewable distributed microgrids in the emerging markets of the world. And we created a blockchain-based mobile application that allows our end users to prepay for energy and use it on a pay-as-you-go basis.
Amazing. So this is operational or not yet?
Yeah, so we have our MVP up and running. Our code's working. We're doing a fundraise right now to kind of get the rest of the back end shored up and get the scalability issues figured out and run from there.
Amazing. Okay, you said you're in a fundraise right now. Are you doing a security token offering or?
We are, yeah. We're doing a Reg D, Reg S offering. We're hoping to have it all figured out here before the end of the year and issue the token and do the token sale in Q1 of next year.
Amazing. What do you think is the biggest promise of maybe blockchain in general, but if there is one for security tokens, what do you think?
I mean, for blockchain in general, we love it because it provides trust, transparency, and reduces corruption in the emerging markets that we're working in. So being able to have the immutable ledger and being able to show where every dollar that's spent is going is very huge for us. It creates, and most of the people that we work with in the emerging markets, they don't have credit and they don't have bank accounts. So now that they can access via our mobile application, our mobile wallet, they can now essentially use that as a bank account for themselves to be able to transact, not just for power, but you can do it peer-to-peer. You can use the Gen Credit, which is the in-market token, to be able to buy goods and services from other people because it has an actual intrinsic value. It's a stable coin. It's pegged to the US dollar. So that's kind of where we see the kind of grander vision for this being kind of replacement for these very unstable currencies around the world.
Yeah, amazing. Well, thank you so much for sharing with us what you're doing. Nice to see you. I'm great. Thanks for being here. So for all our viewers out there, can you tell us who you are and what you do? I already know them.
Sure, I'm Matthew Sullivan, and I'm the founder and CEO of Quantum RE.
And Quantum RE is a new take on investing in someone's home. Is that right? So, like, if I want to sell a part of my home, that's what you're in. That's the game you're in, right?
Well, the biggest challenge that homeowners face if they have equity in their homes is how do you unlock that equity without taking on more debt?
Right.
And it's a big problem, particularly if you're not able to borrow more money. So if you're a senior or if you're simply in a position where you don't qualify to borrow money, all that equity that's yours that you spent years paying off, you're not able to tap into it. So we're using the blockchain and cryptocurrencies to enable homeowners in the US to unlock the value of the equity that's stuck in their homes.
Amazing. Okay, so there's some other companies that do that in a non-blockchain world, but what makes the security token, the advent of security tokens, why is that a better way to do it?
there are so many people that want to be part of that real estate asset class. So there's over $5 trillion worth of equity in the US. The overall residential single-family owner-occupied market is $32 trillion. And of that $5 trillion, 40% of that is in California. So there's a multi-trillion-dollar market that is very attractive to investors. We provide access to those investors, to that asset class. And that's the real difference that we bring compared to our competition. Our competition really only allows access to institutions and family offices. And what we do is we open that market up, we democratize it so that the man in the street is able to invest in fractionalized equity in single-family homes.
Amazing. How did you stumble across this world of tokens?
Well, the biggest question that we had going back a number of years was, how do you value cryptocurrencies? If you're searching for intrinsic value, there isn't any. And that's really why I think we've seen such wild swings in the price of Bitcoin in particular. So our objective really was, how do you leverage the efficiencies that cryptocurrencies bring, yet at the same time build it on top of something that has intrinsic value? So we were really, with blockchain, we had faint signals from the future. So having built companies in the early days of the internet, you could see and feel that this is something really interesting that's about to make some significant changes. So we wanted to be part of it, but we had to find that way, a way that actually created something that was real, that had real value and real longevity.
What do you do?
Well, I'm an IT professional.
Okay.
I stumbled upon security tokens. But I'm also interested in real estate investment, securitizing it. Essentially, my goal is to let the investors trade their securities instead of getting locked up their investment for 5 years, 10 years, as long as you own the property. I want to give that option to the investors so that they can trade their securities, what they own, and not locked up with their investment.
Actually, I'm really interested in tokenizing a movie fund, so a slate of movies. So
sure.
I got into the blockchain space about a year ago, and it was fascinating, the whole security tokens, fractional ownership, and so I've been trying to spread the word, education and awareness of my community, as well as having meetups now, just potential issuers and investors.
Great. Okay, so do you have a fund that you're looking to tokenize, or you're building a fund and thinking about
trying to build a fund, like a slate of movies, and breaking it into tokens and fractional ownership. So it's a process.
Absolutely. There are a few examples of that already.
Movie coin and what have you. But we're a little different. But either way, I think realistically we're a year out.
Great. Yeah. Well, you're in the right place. Hopefully we can help you learn, meet some people that might be able to help.
I'm a reformed stockbroker, so I'm used to the traditional security world. So when I got into crypto through an incubator I was working at called Plug and Play up in Sunnyvale, where I met the Necky guys, and it obviously sparked my interest having a background in securities once this whole next wave came along.
Awesome. We have a plug and play now in LA. So where do you guys see this whole thing going? I mean, it's early days. Certainly you've been in about a year, you said, and I know in the movie industry it's still been only maybe 1 or 2, 3 examples of what you're doing. What you guys are doing is extremely relevant and timely, but what do you think is going to happen with the security token sort of field, maybe in your world?
Right. Well, I think the key really is awareness and education. People need to understand what security tokens, what it is, how it works, what have you. So I think it's a team effort. We all have to do that in our own individual networks. I mean, I come to a lot of meetups and conferences, but I feel like a lot of times we were kind of preaching to the choir. But we definitely, which I've been trying to do, we definitely need to go into our respective industries, like in Hollywood and Hollywood meetings, and say, hey guys, let's do a Satoshi roundtable and talk and drill down and answer all the questions. So I think that's really important. So
evangelizing, yes. Well, we're all about that, obviously. If we can help, let us know. What do you think is happening? Where is it going with what you're seeing?
I mean, I think it's going to be interesting to see sort of the consolidation of the different platforms and see which ones emerge as the best ones out there. So like, who's going to be the E-Trade from 1998 when I could go sign up and trade stocks? So like the Polymaths of the world that we're, talking to and partnering with, and the Vertalos of the world, and the SECURITIZE and New Alchemy, and all these great groups. So it's going to be interesting to see which one takes the lead early first quarter, second quarter with their issuances, and which ones have actual up and running, sales.
Amen. All right. Well, thank you guys for sharing your thoughts with us. Nice to meet you.
What you guys are doing? It's fantastic.
Thank you.
Thanks for having us.
All right. Good to meet you.
And mark your calendars for our next Security Token Meetup. It takes place Thursday, January 31st inside Maggiano's at the Grove in Los Angeles. Free food, drinks, networking, and more. You can find all the details on our website. Just click on the events page. And you can also visit us on our Meetup page at the address on your screen. We had a great turnout last time, so be sure to RSVP to secure your spot to this free event.
And coming on January 16th, a special case study of the financing of the St. Regis Aspen Resort through tokenization. Tokenization enables fractional ownership of commercial real estate projects with digital assets called, what else? Security tokens.
All right, that's it for this special episode of Security Token Insight. Be sure to follow us on Twitter, Facebook, Telegram, and Medium. And don't forget to subscribe to our YouTube page so you don't miss out on any of our videos and expert interviews. I'm Amy Wan.
And I'm Adam Chapnick. And before we go, a big thank you to our Platinum corporate members, Merrill Lynch and Securrency. We invite you to learn more about our corporate members by clicking on the directory page of our website. And for everyone here at Security Token Academy, thanks for watching.
Learn about regulations governing cryptocurrencies and security tokens from around the world with our regulatory review. It's on our website, securitytokenacademy.com. Click on the Learn page so you can stay informed.